Hello, this is Caleb Barney with Russell Real Estate, and today I wanted to go over a quick article from Housing Wire, as well as go over the local market stats for the primary school districts that I serve. So this article from Housing Wire, the headline says that the housing market correction will be deep and ugly. Subtitle is just saying that if rates do climb into the sevens for the 30-year fixed rate interest, the current origination forecast of $2.2 trillion in 2023 will look awfully rosy. So essentially what they're saying is the Fed met recently, so they met a couple of days ago, and they decided to increase the federal funds rate by another 75 basis points. This was predicted by many experts, but it still is pretty unwelcome just because it makes lending more expensive, lending as a whole. And I've gone over this previously, but essentially when the Fed increases the federal funds rate, it's not a direct correlation. So when they're increasing the rate by 75 basis points or 3/4 of a percentage point, it's not like mortgage interest rates go up 3/4 of a percentage point. So some of that is already baked in by the mortgage lenders. But when you do see that that increase in the rate, you're also going to see, at least most of the time, some type of increase in mortgage rates as well. So basically what they go over here in this article is last week the 30-year fixed rate was at 6.29%. I'm sorry, that's this week, and that's up 27 basis points from the previous week. And then just to give you a little perspective, a year ago at this time, 30-year fixed rates were at 2.86%. So we have gone up like 3.5 points, essentially, which makes the housing affordability much, much lower because we're still seeing house prices go for essentially all-time highs. So what they state here, and what I think is kind of an obvious statement, it says, impacted by higher rates, house prices are starting to soften and home sales have decreased. However, the number of homes for sale remains well below normal levels. So I've gone over supply and demand on a ton of videos, but essentially that's the main driver for house prices. And when the interest rates were at historic lows, so sub 3%, there was a ton of demand because housing affordability was very high. It was very easy to afford nicer houses then. But now with our 30-year fixed rates projected to be 6.5% or even higher, 6.62% on Thursday afternoon, which was yesterday, houses are just becoming less and less affordable. So for those people who bought or refinanced within the past couple of years, which is the majority of Americans, unless they, either owned their home outright or they had so few years left that it didn't really make sense for them to refinance. What is their incentive to buy a house at 6.62% compared to keeping their sub 3% interest rate? And that is why we're not seeing a ton of house sales, homes for sale being listed then. Because essentially, and they go over the change in your monthly mortgage payment, if you are buying a house at a 6.29% fixed rate loan for $400,000, your monthly payment will be about just under $2,500 per month compared to $1,660 a year ago. So even if you are getting a raise at work, you're probably not getting an $800 a month raise. So that's why there's fewer houses that are going to be listed for sale. And that is actually showing in the areas that I serve. So this is where I wanted to bring it to the local housing market because, again, you can read headlines for national data, but that doesn't really mean anything because there really is no national housing market. Everything is going to be hyper-local. So I'll show you here. This is actually just for, I narrowed it down to Medina, Brunswick, Strongsville for the school districts. And I wanted to start with basically the active listings. So you could see over the past 10 years, active listings have slowly and steadily been declining. And that even goes from 2020 and 2021 to 2022. Everybody heard the past 2 years we have no inventory. Well, we actually have less this year than we had last year. And the idea in theory is active listings should actually be going up. And essentially, we should have more months of supply or months of inventory because houses are becoming less affordable. So, days on market is going to increase. And then, as houses are sitting on the market longer and we're still getting our influx of new listings, then the total number of listings, which is the total active listings for sale, will go up. But once again, the big thing here is the new listings are actually not going up. They're decreasing because of that mortgage rate lockdown premise where people don't want to trade in their 3% mortgage for a 6.5% mortgage. So when you look at the active listings, you could actually see 2022 compared to 2021, we have actually been lower in every single month for how many houses are available for sale in Medina, Brunswick, and Strongsville school districts. So there really isn't a ton of inventory. And that, again, bears out with the number of new listings where we're looking at this and everything. That's why you see these highs and lows. Everything's cyclical and seasonally adjusted basically for the real estate industry. But when you look year over year, August of 2022 was actually the first month in 2022 where we had more new listings than the previous year. And my thinking behind that is maybe it's a little, FOMO, fear of missing out from sellers who are like, gosh, I have to cash in on this when home prices are still high. I'm not sure, or maybe it's just an anomaly. I mean, realistically, it's 14 new listings compared to last year in August, and that's over, 3 school districts with a fair amount of people there. So could just be an anomaly, but if you look at every single other month, 2022 versus 2021, we actually have fewer new listings every month compared to last year. And as a result, months of inventory, again, that's just going to show your active listings versus your amount of buyers, essentially. And inventory has slowly been going down, or somewhat rapidly for a little while, and then it's trailed off. But we're at 1.28 months of inventory. That's actually the lowest amount that we've had in all of 2022. So there's not a ton of houses available for sale, and we still have more buyers than we have houses available. So that's why we want this number to actually be closer to the 3 to 6 month range in order to be more of a balanced market, but we're just not seeing that right now because people are disincentivized with the higher mortgage interest rates. And then again, in theory, you would say, okay, houses are becoming less affordable. It's becoming a greater percentage of people's take-home pay, and at some point, something's got to give because they still need to afford transportation, food, lifestyle in their budget, whatever they want to do. But and you would think that you can't just keep pricing houses on the high end and still have your interest rates go up and people being able to afford the house. So you'd think houses sit on the market a little longer and then eventually have a price decrease. But as you could see from the average days on market, we actually hit 20 days on market for August of 2022. And once again, that's the lowest days on market all year, and by a pretty considerable amount too. So the past 3 months we've had over 30 days on market, whereas August you see 20 days on market. And by an extension of that, days to sell on average, this is different than the median, but which is going to be lower. But on average, when we're looking at how many days it takes to sell, 20 days to sell right now, which is the second lowest month in all of 2022. So, in theory, yes, higher interest rates are going to mean houses should sit longer, but we're just not seeing that in practice in the Medina, Brunswick, and Strongsville area. And then lastly, again, you're going to see the home prices bounce up and down month to month, but essentially what we're looking at is higher year over year home pricing. And this obviously isn't necessarily comparing true apples to apples. It's not only 3-bedroom, 2-bathroom houses or 5-bedroom, 3.5-bathroom houses, anything like that. But it includes all sales in Medina, Brunswick, and Strongsville. But once again, you can see every single month we have seen a pretty substantial increase for year over year purchases. So if you bought your house last year for $300,000, this year, if you're buying in Medina, Brunswick, Strongsville, the average home sale was $312,000. So that's where a lot of people are waiting for that market to crash, but you just never know. I mean, people have been saying that the market is going to crash since 2013, and you could see how much home prices have gone up from August of 2013, $195,000 to August of 2022. So in 10 years, you're making over $100,000 there. So that is just a quick recap, not so quick recap of the housing market in Medina, Brunswick, and Strongsville. If you are interested in buying, selling, or investing in real estate in the Northeast area or Northeast Ohio area, or if you just have general questions about the housing market, feel free to reach out to me and I'd love to chat. Thanks. Have a great day.